Congratulations, you've just stumbled on the best investing channel on YouTube. I can't say I don't envy you. I've been wasting a lot of time lately building financial models and fair value calculators in a futile attempt to find stocks that are trading at a discount in this frothy market. I found myself glued to this mind-numbing task, almost unable to do anything else. You cut that out and play video games, young man, I've said to myself. To no avail. I'm trapped in an infinite loop of looking at stonks until I convince myself one of them is good enough to buy. Why is this happening? Well, it's because I've been getting the urges again. You know, the urge to YOLO thousands of dollars into a stock using an unhealthy amount of leverage. And that's kind of a problem given that markets are near all-time highs. Fortunately for me, my Google position has done pretty well. So as far as I'm concerned, I've earned the right to give some of that money right back to Wall Street. Yesterday, I closed a lot of positions for a profit, but I haven't been sleeping well. It feels too easy right now, and that sense of ease is leaking into my subconscious, and my subconscious is leaking into my waking hours, which is bad because that's when I'm alone with my computer and my Robinhood account. It happened again. It was yesterday at 3:59 p.m. I YOLO'd into 100 shares of NVDL. You know, the 2x leveraged Nvidia ETF, with the hope of selling a deep-in-the-money call expiring the next day.
Kiff, I'm feeling the captain's itch.
I'll get the powder, sir.
I immediately got buyer's remorse and went to sell it, but it was too late. The clock had struck 4. I found it hard to sleep that night. I wasn't concerned about making a bad move, or even about potentially taking a loss overnight. It was more that I had allowed the demons to win again. Luckily for me, by the next morning, the stock hadn't done much. I closed it for more or less a break even. That was a close one. But if I don't YOLO into a stock with a decent valuation soon, this is sure to happen again. And we can't afford for that to happen, can we now? With my recent lapse into financial degeneracy fresh in my mind, I revisited some of my old DD and stock valuations. So let's talk about those. Let's again convince ourselves that this is a real thing we're doing here. I know the fun is real. Besides, what's the alternative? Just put all your money in the S&P index, or a bond index, or an emerging market index? Where's the soul in that? Where's the heart? Incidentally, nothing I say is financial advice. I don't want you to cite me as the reason your financial life is in shambles 5 years from now. Anyway, let's talk about some of the stocks that I like. I've spent a lot of time conjuring future earnings out of thin air to come up with some fair values on some of my favorite big name stocks, and I'd like to see how close or far off you guys think I am. So let's get into it. Oh, one more thing. As an added bonus, I'm going to share a somewhat riskier play with you guys. Because you know, I'm always looking out for the degenerates among my subscribers. But before we get to that fun scratch off, let's talk about Nvidia, Google, and Taiwan Semiconductor. These are all big names that you've heard of 100 times, so I'll save my sales pitch for the fourth mystery stock on this list. And I know that phrasing makes it sound like they're sponsoring me, but they're not. No, ladies and gentlemen, at this stage in my YouTube journey, I'm a dumbass and a shill for free. The first stock is Nvidia. Yeah, I know, everyone likes Nvidia. Jensen Huang is a god among men. They sell the shovels to the metaphorical AI gold rush. You've heard it all 100 times before. I've been in and out of this thing for a long time now. I sold it at $105 a share a while ago, then bought it back, and exited again at $145. Today it's at $170 a share. Based on some numbers I made up, I think its fair value is somewhere around $180. So even though it looks high right now, feel free to hop in, particularly if you see a dip. Things are frothy, but the valuation is weirdly not too bad at this stage. Market efficiency and all that, I guess. If you're enjoying this video, please consider supporting Cult of the Almighty Dollar on Patreon. There are free and paid tiers available, and by becoming a cultist, you'd be helping to support the degenerate arts, and ensuring that I have enough serotonin to keep doing this.
Help me, I'm poor.
Links are in the description. The next stock, which is one of my personal favorites, is Google. It gives you that huge upside combined with a comparatively low volatility, as well as a somewhat mature and established business model, basically search and ads, which is refreshingly easy to understand compared to some of the other businesses we cover. Google's price recently spiked, vindicating my long-standing advocacy of the company on the basis that the DOJ has no balls. I actually owned some GGLL, its 2x leveraged ETF counterpart, during the spike, so I had to sell out of that position, obviously. I'm going to let Google cool off for a while and look for another dip before buying back in, because for me, I see Google as a long-term hold. For now, I'm glad to see that Google's stock price finally did something for us superfans. It feels good to actually be right about something. My third and last big name stonk pick is Taiwan Semiconductor. Nvidia's partner in crime, without whom there's no Nvidia tech, no AI slop, and certainly no surveillance dystopia. Again, it's riding high along with everything else right now. I owned this stock back at 150 and again at 180. I'm basically like a vulture waiting for another good entry point. The risk with all these stocks is waiting too long for a dip that never comes, and before you know it, you miss out on some serious gains. That said, I do think TSM might be a bit overpriced at $234 a share. That's kind of where my head's at now, but that could obviously change. So to recap, out of the 3 big name stocks I've talked about, Nvidia is the only one that I'd buy right now if I had to pick one out of the 3. And by right now, I mean September 4th, 2025. Who knows where the stock price will be by the time this video is out. Here's hoping this ages well. And now the moment we've all been waiting for. Let's talk about my scratch-off stock. Tempus AI, ticker symbol TEM. This stock first came to my attention as a Nancy Pelosi play earlier this year. In January, she bought $20 call options on this stock. If you've been following Cult of the Almighty Dollar for a while, you know our girl loves those really deep in the money call options. She also famously used deep in the money calls on Nvidia. If I'm remembering this correctly, she bought like $80 calls on Nvidia back in the day while it was trading at somewhere over $100 a share. Anyway, Tempus has been volatile, as you can see by its chart, but it's up over 120% year to date. Let me just say, does our girl know how to pick 'em or what? That's why she will always be my GOAT. Anyway, it's $76 a share. Tempus is definitely near the high end of its valuation at the moment, but I still think it may have a long runway ahead of it. After all, the company hasn't even reached profitability yet. The guidance is that they'll become profitable on an EBITDA basis sometime in 2025. Here's open. Let's quickly go through what Tempus AI actually does. We all know that it's a ticker symbol, which we can use to gamble our hard-earned money on for a chance to underperform in the market. But what do they actually do in real life? What value do they add to the healthcare industry? So Tempus's revenues derive from 2 basic areas: genomics and data services. Tempus performs high-throughput genomic sequencing, mostly in oncology, offering physicians detailed reports and AI-informed insights for personalized treatment decisions. The genomics segment generates revenue on a per-test basis, and Tempus capitalizes on the vast amounts of data it collects from these tests to provide data-driven services to third parties. That's the data and services segment, which includes licensing de-identified clinical and molecular data, along with analytical tools, to pharmaceutical and biotech companies for research and drug development and clinical trials. Its AI models can be used for diagnostics, analytics, as well as recommending specific care pathways. While oncology is their core focus, the company also has a footprint in a variety of other fields, including radiology, cardiology, pharmacology, dermatology, and many other ologies. Now, you may think that because of its name, that Tempus AI is some kind of phony baloney AI hype stock that sprung up overnight. But the company's actually been around since 2015. They changed their name from Tempus Labs to Tempus AI in January of 2023, because as we all know, adding the word AI to your company name is kinda huge when it comes to raising capital. Here are a few metrics that illustrate the degree to which Tempus is a player in the healthcare industry. About 65% of all academic medical centers in the US are connected to Tempus. Over 50% of oncologists in the US are connected to Tempus through sequencing, clinical trial matching, and research-enabled partnerships. And most impressively of all, 95% of the top 20 pharmaceutical oncology companies partner with Tempus. Their competitive advantage lies in the scale and breadth of their data ecosystem, which creates pretty high barriers to entry. Tempus has one of the world's largest libraries of multimodal medical data, which includes genomic sequences, pathology slides, radiology images, and electronic health records. What I like about this business is that it's quite scalable, and there's good synergy between their genomics and data service divisions. Let's talk about revenue growth, because we need that line to go up, especially since they're not profitable on a GAAP basis yet. Tempus has had strong revenue growth till now, and is expected to hit $1.2 billion in sales for fiscal year 2025, which would be an 81% increase over what they did in 2024. So science mumbo-jumbo aside, us investing-brained goons can see that line is going up, which, as we all know, is very important when it comes to investing. Analysts predict that between genomics and its data offerings, Tempus has an addressable market of about $200 billion. If they could capture just 5% of this market by 2030, I'd value this company at about $120 a share. The main risks I see are competition and the fact that they seem to enjoy diluting their shares. Hopefully they stop doing that as they become more profitable. But my 120 fair valuation actually does include a 5% annual share dilution into the foreseeable future. Not that I think they'll keep doing that, but you never know. Like I said before, they're expecting to make a very small profit on an EBITDA basis for the first time in 2025. I think once this happens, more normie investors will begin to show an interest and valuations will start increasing even more. I guess some investors need to see a positive PE ratio before they take the leap, which means there's still an opportunity to get into the stock before that happens, despite the fact that it's already up 120% year to date. I don't think this is the next Amazon or Palantir, but it's the next something, and I have that on good authority. So while it's not the next Amazon, it's not exactly an obscure little meme stock, given the fact that it's a Nancy Pelosi pick and that its co-founder is Eric Lefkofsky, who also has the interesting distinction of being the co-founder of Groupon. My point is, I think more people are aware of this company than some stupid quantum computing stock. I know some people on the internet have mixed feelings about Eric, but I will say that he's been involved in 4 different IPOs, so by now he should at least know how to win over stonk analysts. And that should be a positive thing for the stock price, because by now we all know how important it is to whisper sweet nothings into analysts' ears. To sum it up, there are risks for Tempest, but I like it enough to take a small position in this company. And by small position, I mean an unreasonable amount of shares given the size of my portfolio. I hope I don't regret this. Even with competition in the healthcare tech space, if they can manage to scrape up just 5% of the total addressable market, that would make them a $10 billion business. I think they've got a believable path to that number. I didn't think much of this company when I first heard of it, but I have to say, it's a buy from me, guys. Just strap in for some volatility. I think the 120% rise year to date would be enough to scare off a lot of investors, but in the grand scheme of what I think this stock will do, that 120% isn't going to seem too significant. Obviously, none of this is financial advice. Just the ramblings of a degenerate gambler on the verge of burnout, but who still somehow finds the time to produce S-tier YouTube content. Let me know what you think about this stock pick, or if you have any others. Thanks for watching, and I will see you in the next one. Bye for now.
Take it to the bank. I
Okay.
guarantee it.
All right.